Greetings all. I'm so excited that you have selected to join the NaturaCare Health and Wealth Club. I do believe that we all are embarking on an exciting, wonderful journey together that will benefit you, your family, and beyond into your communities and the world. Please open your trading platform with the volume Williams squeeze setup that I hope that you have already downloaded into your computer so that I can show you how I utilize this setup to trade and how I utilize the wonderful capabilities of the Thinkorswim platform. First, I want to show you some important points about the platform itself. Located in the upper left-hand corner is the word setup, which you should already be familiar with. But right underneath it is the word on demand, which I use quite frequently to study how specific stocks have behaved in the past and to sometimes practice over the weekend when the stock market is closed. What's nice about the online on-demand feature is that you can use the calendar setting to set the date to almost any trading date in the past. By clicking on it, and then it shows by clicking on it, it shows, well, it usually shows, there it is, a calendar and time where you can set it to any date that you want. I will show you how to utilize it after this lesson. If you slide your cursor left on the same level of on demand, you'll see the words help, education, and tools, which can introduce you to even more functions, some of which I have never utilized, but they are there for your investigation. The words that I do utilize quite often are chart, trade, and monitor. And I use that to study my watch list, decide what to trade, place my trades, and keep tabs on how my trades are progressing. The workday chart should be showing on your computer right now because that's the stock I was viewing when I saved this particular setup. Now I'm going to talk about the chart itself and the indicators that have been selected. In the chart itself, there are colored lines that are simple moving averages. The red line is the 8 simple moving average. The blue line is the 20. The lavender line is the 50 simple moving average, and the 200 is the white line. The 8, the 20, and the 200 are the three major simple moving averages that Oliver Velez uses in his scalping of trade flats. I added the 50 because I attended a trading summit that said that the 50 moving average, if the price goes over it, said go long or buy calls. And if the price goes under it, he said sell short or buy puts. And I tested it out and it seemed to hold true. So I added it to my normal chart, which only used to have the 8, the 20, and the 200. Now it has the 50. You will also notice what is called the candlesticks. And candlesticks are in two colors, red and green, corresponding to the red selling and the buying of the traders, which is indicated by green. So red is selling, green is buying during certain time periods. The red candlestick usually indicates that the bearish traders are dominant during that specific time period. And the green candlestick usually indicates that the bullish traders are dominant during that specific time period, buying stock. Also, in the chart area, you will sometimes notice a little blue and red circle, which indicate the time that this particular company, in this case, Workday, had its earnings report. And if you run your pointer over it, it will give you the time, the date, and the result of the earnings report. We will focus trading earnings at a later date. But right now, I just want you to get comfortable with the charts, the indicators, and how well they relate to the price movement. Underneath the chart is the volume indicator that shows how many millions of shares of that stock are being bought with the green line and are sold with the red line at any particular time during the day or night. The Williams indicator, right underneath volume, lets us know how overbought or oversold a stock has become. When it's at the top above the 20 white line, the stock is overbought, and you can expect the price to eventually go down. And when it's below the 80 line, which is this one, at the bottom, the stock is oversold, and you can expect price to eventually start going up. I like this indicator because it usually parallels very nicely with the actual movement of the stock. For instance, right here, when it's coming out of the overbought, the oversold, you can see that the price start going up. And when it gets to the overbought area, it just stays up here. And what happens is that the price just stays going up, which is exactly, this is a wonderful, long, beautiful, very productive, and a lot of money going from here to here. So the indicator is very, very important, and we utilize them to help us make money. The bottom, TTM squeeze indicator is another way to visualize the movement of the stock price. And I like to see it in harmony with the Williams percent R when I'm considering trade. The red dots appearing on the bottom indicate that the price is getting ready to make a big move, either up or down. So the red dots tend to give you a little peek into the future of what's going to be happening relatively in a short period of time. For instance, these red dots right here, getting ready for a big move up on the price chart. And at the bottom of this window, you can see the days, all the way across. And this is the day chart. If you change to, for instance, a 15-minute chart, it will give you the days of the week. If you change to your time frame to 2-minute chart, it'll give you the time of day that all of these wonderful price indicators are operating. At the top of the chart, I'm going to go back to 1 year, and at the top of the chart, in the blue strip, there's little white words and symbols, patterns, studies, drawing. D for day, basically it's the time. This little wheel helps you to navigate and describe what you want your chart to look like. This is a flask, and it tells you, gives you a list of hundreds of indicators like Williams percent R, PTM squeeze, and one that we're going to be working with, a Bollinger, the Bollinger Band, which is very interesting and accurate as well. So share the bid, the last current bid and ask for the stock for people who are buying stock, the current price, full name of what WDAY stands for, and then this box where the symbol goes. This is where you can type in the symbol, AAPL, Apple, and you get your Apple chart. Now, out of all these things on this blue line, I have only used the drawings, the time of day, the star for setting up the way that are customizing the appearance of the chart, and the flask for adding these indicators. And the stock market symbol for chart viewing and trading, because this symbol corresponds to symbols right here in my watch. And I have them connected with the same connecting device, symbol link, the red there and the red here. So that when I going through my list, It makes looking and studying what the uh, different stocks are doing at any time or just before an opening. Now, with ACN, the new high, relatively new high a few days ago, and I expect it to go down because that's what happens when you have a new high. When it had the low, this was a new low. This was a year low. And you see, this is what happens at new low, new yearly low. So it went from $242 up to $355 in 1, 2, 3, 4, 5, 6, 7, 8, 9 months. An option bought here, a call option bought down here, or maybe a year leap would have made a tremendous amount of money. So feel free to investigate the other features that I don't use, but they are there to be used. Next, we are going to examine the trade tab, where we will be making most of our trades. We will go down to the option chain, and you can see that the option chain extends all the way into January 16th, 2026. So 2 years away. So you can buy, these are called leaps. You're leaping years, leaping this year to June 2025, January 2025. These are leaps. But when we're trading, doing what we call swing trade, we want to be close, especially if we're seeing new highs and new lows for the year. For the new high, we want to January 19th would be good to look at put options. And we can see ACN, you can see that there's not really that much interest in ACN, even though the distance, you don't want the price between the bid and the ask to be more than 30 cents, because that means that both the people who are interested in buying that option and the people who are interested in selling that option on possibly stock that they own, they're relatively in agreement to the value of that. When they're not in agreement, you got a problem. And you don't want to be buying into a problem. Here goes a nice 490, 460, and at 350 is just right in the money. Now, people are not expecting, doesn't seem, this stock to go down. However, it can. And the only reason that I would really consider doing this is because there's so many actual options on the call side where people expect it to go up. So after the lesson, I'll come back, maybe trade. So you have all of your call options on the left and all of your put options on the right. Puts, you buy puts, you think the price is going to go down, or the chart tells you that the price is going to go down. You buy calls when the chart tells you that the price most likely is going to go up. And if we end up in this scenario with a low, not so far away, but a low, if this is like, if this was a new low and this hadn't happened yet, we would have gone to the calls and not the January calls. It was recent, but maybe the March call. And check out, see, it doesn't seem the ACN is very popular. And actually, I would let's see Adobe, how Adobe looks. Hey, Adobe almost looks the same. Adobe. $85, $35. I'm not really impressed by these numbers. 25 and 60, volume of 3. Yeah, no, I want people to be more excited. I want more traders. I want more traders so that the volume is how many of these options have traded totally. The open interest is how many of these options are open that people have bought and they're holding on to them to see when they want to sell or convert them to actual stock at a great price because they bought them when the price was way down. When purchasing a put, I'd like to choose expiration dates that are relatively close, and that was choosing January 19th. If a stock made a recent new year high, you want to buy a put relatively close within a month. And the opposite goes for the chart. If you didn't know any of this existed, and we got a new low on Adobe, we would want to buy a call. You see how many each one of these lines is a month. So new low, a call. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months going up. And you can tell that right in here, especially You can tell when the 8 stays distinctively over the 20, you trade with it. And it dropped down here, but everything tells you what's going on. Price dips a little bit, but it's still going up. And another indication that is going up is the 200 going in an upward surge. So when the 8 and the 20 are going up together, like right in here, that's called a power uptrend. When you add the 200 to it, it becomes a superpower uptrend. And we'll talk about that in the near future. So as I indicated, you can also buy leaps, which are going into the next year, and even it goes January 16th, 2026, 2 years. If you're a buy and holder type of person who likes to buy stock, hold stock, this could be really, really good because you'll be controlling 100 shares of that stock without spending 100 shares money for that stock. I've only purchased one leap in my life. Back in 2020, I purchased one leap, the AMD leap, the indoor movie company, for $70. And when they lifted the freeze on people going out, that $70 turned into over $2,500 in value, a call, and I sold it for $2,500. My daughter had a similar purchase with AMD. She got in before me and bought one for $50. And she held it longer than I did and sold it for more than $5,000 after, I think, about 3 months of holding it. So for companies that you believe in and you like long-term investing, you may want to purchase LEAP. Before we start looking at the various bid and ask prices, we need to understand that one call option gives the purchaser the right, but not the obligation, to purchase 100 shares of that particular stock for an agreed price before the expiration date. And the put option gives the purchaser the right, but not the obligation, to sell 100 shares of that particular stock for an agreed price before the expiration date. We must remember that all the prices displayed on the option chain are for each share of stock in quantities of 100. So a bid or ask price of 2.14, $2.14, means that the cost for the option, which is 100 of each one of those shares, is $214. And the price of 11.14 indicates that the option for 100 of those shares is $1,114. Wendy Kirkland does a wonderful explanation of the benefit of stock options over stock purchases in her book, Your Guide to Option Trading. And I'm going to send that book to you as an ebook. And I encourage all of you to read it so it solidifies what option and the power of options in your mind. The most simple information that I can share with you in this lesson is when you expect the price to go up, buy calls. And when you expect the prices to go down, buy puts. When choosing an option to purchase, I look for prices that are within my budget. I've heard most professional traders suggest that you don't spend more than 10% of your account size on any one trade. And that's good advice when you have a large account. However, if you're starting with a small amount, $500 or even smaller, like a $300 account, that rule would mean that you have to utilize no more than $50 or $30 on each trade. And when you get into those kinds of values, the selected options quite often are very much out of the money, meaning that they are so far away from the current price of the stock that they may have little or no chance of becoming profitable. And I've recently discovered that sometimes there's no one even selling or buying that option at all. And you kind of get stuck holding it because you bought it at $10 or $20 or $30, but the price moves so far away that none of the other traders are even interested in that particular option at that strike price. So make the selected. So instead of the 10% rule, I purchase as close to my total account as possible, or 50% of my account if I am considering making two trades. And I use a stop to minimize the loss if my selection is incorrect. For some reason, I don't like to lose more than $20 or $25 on any trade. So that becomes my risk unit where I position my stop value right after I purchase it. If the value of the option decreases by 25%, $25, it will automatically sell that option and return the balance to your net liquid account. In the upper left-hand corner up here, you'll see that your cash and sweep vehicle or available funds for trading will get added in here. Your option buying power will be shown up here. TD Ameritrade used to make that happen automatically. I don't know if Schwab, they told me they were working on it. They did not keep, for some reason, this option buying power was not the actual option buying power. And I discovered that the hard way. So again, speaking of trading accounts, I suggest when you open your account at Schwab, you also open one additional account. So you have two accounts. You have a margin account, which usually is the first account that you open from my experience, and an additional cash account where you have the freedom to go in and out of trades with only the restriction being the amount of money in your account. With margin accounts, you're limited to how many same day in and out trades you can perform during the week unless you have $25,000 or more in your account. Because of these restrictions, I use my cash account almost exclusively. Now, the remaining area to speak about in this charting is the monitor, which is right here next to trade. hit the monitor, and the monitor shows you click on activity and position, and this is the area where you get to see all of your trades along with their profit and loss for the day and the profit and loss since you first opened and purchased. And you can see all of that. You can see the details. You can see what option you purchased, quantity, how many you purchased, how many days before expiration, trade price, what the mark is, what is the value of your option right now, and what the change, what the difference is between your option cost that you paid and what the value is now. And I'm $7.50 up on this particular ADSK auto base. Now I want to turn our attention to what's happening over here on the left side of the screen to view the watch list areas I've chosen. The top watch list is see, it says option watch. This is where I list the options as I buy them so I can keep track of how they're doing without having to leave the chart. I can look at the chart and still see how everybody's doing without having to go to the monitor to see how they're doing. And I've discovered that to be very helpful. And I have the number of options, the last, the profit or loss from what you purchased, the profit loss percentage, and the net liquid. If you wanted to sell it today or on a day, that will show. But if you want any other, just click on the little customize and you can customize it any way you want. But this is the way I customize mine. And that works and tells me the information that I want to when I'm trading, especially when I'm trading multiple options. Okay, and then just below that, we have our watch list. Now this watch list, I like S&P 500, but click that little corner, you can have anything. I have personal, you can have a personal watch list. There's a lady, Terry, that has iTrade and Travel. She had her watch list, which very good stocks that she was keeping track of and trading. She's been doing extremely well in teaching people how to trade and buy stock. And I think she also has the options class. So me and my daughter, we took the buy stocks class together about 3 years ago. But there's different S&P 100, 400, 500. There's so many top 10 gainers on the NASDAQ, the New York Stock Exchange, net gainers, most active. There's lots of things that you can discover, and you should look at this and see what the lists have to offer you and your stock trading. So these are prospective stocks, the S&P 500. but I want to consider trading based on their chart. And you will notice that we have a little red, we use the red, but there's a lot of others, choices, colors, but you want it to match the chart so that when you are checking out what stocks to buy, for instance, Apple has a recent high. Well, I would write Apple as something that I might want to look at for trading this week, this month. There's another one, ACN. I would look at that. Adobe also hit a high point. And you have to notice this is on the year 1-day chart. So these are puts. I would look at buying puts on Adobe, ACN, Apple, because they recently had a high, a year high, which is very significant. There's another one, ADI, Autodesk. And when I go and investigate them after I make my list, I go and look and see if the trading makes sense. So here, now with ADSK, I saw open interest 1621 and NA for the volume. Now, when I bought that, volume had a number in it, but that has changed. And so what's interesting is that, and this is the put side. So it's this 1621 because at $45, somebody could have bought 1,000 of it. This might be two people, but look what's happened. There's no bids. Nobody's trying, nobody's offering any money for this 200 strike price because the price is up to 243. So this 200 strike price doesn't look like it's very favorable. And if nobody wants it all the way to January 19th, it may expire worthless because nobody bought it and I'm still holding it all the way to the end. Now, if you really want to get rid of it, you can lower the price from 45 or whatever you purchased it, but I try to stay away from things like this. Even though the volume was there, it was like, unless the price does a significant dive, it might develop some interest here. So you want to have, you want to see activity here, 45. And see, this is 45 and it's closer. So we'll get more into the details of how to purchase, when not to purchase, after this lesson is over. But this is what we're Okay, here goes somebody. AES. Okay, but it's a little bit low. I'd like to, AFL, AFLAC, just had a recent high at 84. That looks interesting, but let's see. And now I don't know if the NA is because it's holiday, but the open interest 00, I think, yeah, and I would. Um, Down here, AFLAC. I would think that it's going to go down, and there's $10 between the bid and the ask. Which is good. There's 361 of these options, put options. So I would try this because of the way that chart, I'm expecting it to go down further. But I look at some other time charts and I see that it's bouncing off of the 200. So it may just continue to go up. So I would probably leave that one alone just because. You see here, AIG hit the high, went down immediately, down 68, down to 67. Okay, went down $1. But a lot of time, this 200 simple moving average acts as support for the prices on the way down. And it looks like it's doing that twice. And looks like it's even doing it along here too. So that 200 simple moving average is support. And the price has a tough time trying to go through it further down. So this is kind of the way that I scout. AIZ is up to 168. See if that's a year high. 172 is a year high. So it's not all the way up, but it's interesting. And it looks like the 50 simple moving average says buy call. See, now this is interesting. At a high point, went down from 254 down to 224. Whoa, $30 decrease. But look what's happening at 200. The 200 is acting as a support, and the price is starting to bounce. Start to bounce off of that 200. So there's different indications that can keep you out of trouble as you learn the way of the price. The I just wanted to make you familiar with all the different, well, not all, but many different options that you have with the Thinkorswim platform. So I have two accounts. I have two accounts. One, oh, there it is. That's my margin account. And one that this is my cash trading. And I suggest you have two as well. And, or if nothing else, at least a cash account. And whether you, because sometimes with swing trading, sometimes you get a swing trade, for instance, here on this AJE, which is Arthur G. But as you see, this, after it hit this high, this downward move lasted from, hit the high on 11/27. It lasted for like 3 weeks. 11/27, yeah, about 2 weeks. And it's still trying to be, even though it looks like it's getting ready to come down, because the 200 bouncing and acting as support for it. But for 2 weeks, it's a nice trade. When you look at these charts enough, you will be able to see and determine more of what the price should do 80 to 90% of. And that should be enough to add money to your trading account and ultimately your bank account. So that pretty well covers what I want to share with you today. But I have some homework, a homework assignment. I want you to use your simulation account, which for me would be this one. Use your simulation account to buy put options when a stock reaches a new high for the year. So you're going to come like this, use this 1 year day trade, 1 year. I'm going to use the 1 year, 1 day. Screen sharing. No, why is it not moving? I have to stop that share, come back in, do another one. I guess that's what I have to do. Come back in. sharing this. All right, so now I'm sharing simulated trading. This coming up week, we're going to see each other next weekend, Saturday or Sunday. Guys, let me know which is best. I'd like to do either a Saturday evening at 7 or a Sunday evening at 7. Let me know what your preference is. Any questions that you have, please text me your name, your question, and I will text you back the answer or I will call you today. And we'll see if we can get you rolling with this. So your homework is to buy put option when the stock reaches a new high and buy a call option when the stock reaches a new low. And write down your choices for that option, year, the strike price, everything, and make note of why you selected that particular option. And we'll see what happens. And lesson 2 is going to be another, I'm going to give you another visual visual chart so that you can look at it and say, oh, stock's going up. I'm going to buy calls and I'm going to buy them maybe 3 months out. Or, oh, stock is definitely in a downspin. But I like the upspin. So that's going to be another setup that shows you 8 different charts at the same time. And from looking at those 8 charts, you will decide whether the stock prices are going to go up or down. So thank you very much. I appreciate you being here. As I said, if you have problems with understanding what I just talked to you about, I will send this recording to each one of you. Well, I don't know if I can do that. Zoom is surprising me in different ways, most of which I don't like. However, I understand that to share the knowledge that I have with other people, I need to use it or something like it. And so I'm doing the best that I can. So thank you very much again. And I will be seeing you or getting texts from you in the future about your trades during the week. And if you can't trade if you're on the East Coast, 9:30 to I think like 4, or on the West Coast, it's 6:30 to 1 o'clock. 1 o'clock in the afternoon, the stock market for trading options is closed until 6:30. So if you can't find time to trade between those times, I suggest you use the on demand and just pick a date and trade it as if you were there at 6:30 in the morning, deciding what to trade. Thank you very much. Have a wonderful, wonderful week, and I will talk to you soon. Thank you. Bye-bye for now.